Morning, guys. What do I want to talk about today? This is what I want to talk about today. Unemployment claims seem to have sent the market into a bit of a tiz, and the idea behind this is that interest rates are going to come off. It's quite a crazy period of time at the moment. Everything's been pointing towards the US economy being stronger, and therefore interest rates are going to go higher and for longer. And we get this one number, and everybody thinks, oh, we're going back. Interest rates are going to be cut this year, not right, not hiked. And there's even chatter about QE coming back, and that's based on the banks' banking performance in the US is not that strong. And so they're going to need a bailout, and so we're going to have more quantitative easing. And so US dollar didn't do much, but US stocks got smashed on the back of it. As you can see there, really got sold off after that number. And the other thing I wanted to point out was this chart here we discussed earlier in the week, that when this curve, the twos, tens spread starts to increase after it's gone below zero, negative, and then starts to bounce, is the sign of the recession is only a couple of months away. So, that looks to be the case. But going back to the charts, the other big move overnight was protection. And we can see the VIX exploded. Looks pretty decent on a 4-hour chart or even a 1-hour chart. That people are starting to take on that protection against the downside move in stocks. Finally waking up. Interest rates also, though, came off on the back of the thinking that we're going to have quantitative easing and rate cut later this year. Don't see that happening. Maybe the Fed will bend to the pressure, but I personally don't see it happening at the moment. So back down to a bit of a support level there in bonds, and it'd be interesting to see where they go from here. Stocks, big one, S&P 500 has certainly broken down and got a new low, so we're now in a confirmed downtrend of having lower lows and lower highs. I'll be looking for this kind of target around the 37, mid 37s. In US dollar, still in a bit of a channel there. This is your channel, and I would be looking for maybe a double bottom around there, around the 104 handle, as a support level. But still happy to be a buyer of US dollars against anything that's weaker, and that's particularly the yen. And today we're going to have news on the yen. We'll have the BOJ. It tends to be around 2 or 3 o'clock Australia time in the afternoon. So around lunchtime, Tokyo time is when the BOJ comes out, and we expect more weakness from them. And then you've got the US employment numbers, which will it follow this line, or will it actually tick higher? And that goes down, will be the interesting thing to note this evening. And so that's dollar index. Look at Aussie dollar. Looking for the hourly to come back and fill that in, and it pretty much did, mostly, most part. But happy to still be a seller of Aussie dollars. The daily is just overdone, so I prefer the market to maybe come back up to this here, that level there, to get a sell on. That's where I prefer to sell, around the 67 cent handle. Euro dollar, back in the mess really. Selling off this low would be good. And then daily's in a good spot to get short. You just need the sellers to step in, and they haven't done that just yet. bit of a level you can lean on there, but we're not seeing the major selling off it just yet. Cable, right on that level again. We look ring high on the 4 hour. Looks like there might be something there for us later today. And got a yen looking to be a buyer. We have this level here lined up. Hasn't quite got there. May not get there because of the news today. And that's about it for today, guys. Be careful with the non-farms tonight, non-farm payrolls, and we shall see you again next week. Have a good weekend. Cheers.